Whether it's a legacy car maker looking to diversify its product range or a pure-play startup, a number of firms are now vying for a piece of the rapidly expanding electric vehicle industry. Few firms appear to be able to compete with Lucid Motors, which generated $4.6 billion in funding through a merger and is currently in the process of delivering its first vehicle to customers. On the basis of a previous occurrence that happened with some other EV manufacturer, we will address what to expect from LCID stock when the first Lucid vehicle is actually delivered to the client. Stay tuned. Welcome back to NewVehicleMedia, your go-to channel for EV stock. Quick reminder that subscribing is free and liking the video helps YouTube suggest similar videos. Comments are loved and featured in upcoming videos. Nobody can ever be certain of what will happen in the future. When it comes to stock, it's either a wild ride, like with GameStop stock, or a thorough research analysis will yield the best outcomes in the majority of cases. To demonstrate very conclusively what may happen to Lucid stock after they deliver their first vehicle, one only needs to look back in time and observe what occurred to other EV firms such as Tesla and NIO when they delivered their first vehicles. This should give us a decent idea of what we can expect from Lucid in the near future as they launch their first vehicle. Tesla first delivery effect. Tesla was not a titan from the start. For a time, it experienced its fair share of frozen stock prices. Even though Tesla was established in July 2003, the company didn't go public until 2010, 7 years after its founding. When the corporation went public for the first time, its shares were trading at $5 a share. The stock underperformed in the months after the IPO as well, with the share price falling by 21.6% to $3.92 per share. The stock continued to hover around the $5 mark until Tesla delivered its first automobile, the Tesla Model S, in June 2013. Investors remained pessimistic about the prospects of electric vehicles at the time. Nonetheless, the stock returned a positive 9.8% for the month of delivery, which is fairly remarkable considering the EV market was just getting started. The company established that producing premium electric vehicles could be a long-term profitable business, and the stock continued to increase, reaching $10 per share from $5. Those investors who were earlier hesitant to invest in Tesla's EV stock when they delivered their first vehicle wasted no time when they viewed Tesla's quarterly financial statements, which revealed a respectable number of EV models sold. The stock proved difficult to stop as it acquired more than 70% of its original value and crossed the $20 mark for the first time. This established a trend in the EV business after that. Anytime an EV producer brought an excellent product to the market, it was always reflected in the stock market. The company continued to flourish, releasing additional versions such as the Model X in September 2015 and the Model 3 in June 2017, which returned 8% on stock in just 1 month. NIO delivery and stock movement. NIO has been the EV industry's sleeping giant. Originally founded in 2014, the company had little experience in vehicle manufacturing when it came onto the scene. The EV startup, on the other hand, promised a bright future. Its Chinese name, Weilai, means blue sky coming. Indeed, it is one. NIO was not listed on a stock exchange until September 2018. NIO, like Tesla, was trading at around $7 per share in its first month. Its stock also underperformed in the month following the IPO, losing 15% of its value. It had months where it gained 20% over the previous month, but it was quickly followed by a significant drop. Eventually, in November 2019, the stock reached a low of $1.49 per share. The ES8, NIO's first mass-produced electric vehicle, was unveiled to the public on December 16, 2017 during an event, and deliveries began on June 28, 2018. We could not see any effect on the owner's wealth because it was before the IPO. However, recall when we indicated that Tesla began the car delivery trend followed by an increase in stock price? NIO experienced the same situation when it released its first vehicle after going public, and it was a notch higher. They only announced the release of their 5-seater luxury electric coupe SUV in December 2019, a month after its stock had reached its lowest point. The stock made a 180-degree swing from a downward to an upward trend that month, soaring almost 57%. The stock's bullish trend continued for quite a while. During the months of June and July of 2020, the SUV was on the front page of many articles, and the stock jumped to $12.53, up from $4. If you think that's incredible, wait till you hear what happened after the SUV was actually delivered and the quarterly statement was out. The sheer volume of delivery caused the stock to soar even higher, reaching a high of $50 a share, and it has been hovering around that level ever since. The value of the NIO was recognized at the time. Of course, there were many other factors that contributed to the stock's rise, but the launch and delivery months were particularly heated due to the announcements. Knowing what has happened in the past and what has happened to those who came before Lucid, we are in an excellent position to handle the question of what we may expect from Lucid stock when it delivers its first vehicles in the future. Lucid stock prediction. Lucid started its humble beginning from 2007, and the company only recently went public during July 2021 and made debut in the stock exchange on July 26, 2021. Lucid's debut stock price of $25.83 per share was significantly higher than the stock prices of Tesla and NIO, and by a wide margin as well. However, there was one thing in common between Tesla and NIO that is also shared by Lucid. NIO and Tesla both experienced a decline in their shares in the months following their IPOs, and Lucid is no exception. The stock of Lucid experienced a similar decline after its merger. However, Lucid stock looks like it's holding its value, since it has been trading above $20 for the majority of the period and has just lately dropped to $18.68 per share compared to Tesla's $3 and NIO's $1.49 drop. Upon closer inspection, it appears that the market is recreating its previous performances a second time. NIO's and Tesla's stock prices rose when they received delivery of their vehicles, indicating that the LCID market has an optimistic outlook because, according to Lucid, delivery will occur very soon. There will undoubtedly be a reaction, and if there's one thing the past has shown us, it is that if the product is up to standard, there is no doubting that the company's stock has reaped the benefits of it. What are your thoughts? Do you believe that the market will repeat itself in the future, or do you believe the impact will be even more significant this time? Let us know in the comments section. John Collins appreciates the fact that Lucid does not rely on third parties for its manufacturing and that all of the parts are manufactured in-house by the company. In his opinion, lucidity will be a game changer, and Mr. Rawlinson has carefully planned his strategy. That should wrap things up for today. Keep in mind that subscribing is still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.